Hello, everybody, and welcome to this first session on financial management accounting tools for NPOs. Now, I know many of you are either really looking forward to this session because you are aware that numbers are the heart of all businesses, NPOs, organizations, etc. And I'm guessing the other half of you are dreading this session because it has the word accounting in it. Now, not to fear, we will be starting off with a very, very basic approach to some of the accounting understandings that you need to have in order to identify useful tools that you can use within your organization to keep financial management under control and to keep overall control of your business finances and as an NPO to keep record of your finances as an organization that is, of course, set up for some or other purpose that is not profit generating in mind. So to start off with today's session, I'm just going to give you a brief introduction to myself. My name is Zafir Nagdi. I'm a chartered accountant by training, and I went the extra mile to obtain my master's degree in international accounting and then fulfilled a lifelong dream of completing my MBA at Oxford University in the UK. I previously served as a senior lecturer of accounting and corporate governance at the University of Johannesburg for close to 8 years. And after moving to the UK and completing my studies there, I then returned and started my own social impact organization called An Academy. And what we do in our organization is grow businesses, start businesses, and provide a range of training, all with an entrepreneurial mindset to help our organizations grow from strength to strength. And so that brings us to our agenda for this module, which is essentially divided into three parts. The first, voice over PowerPoint, which is this one. We will be covering the accounting equation very briefly and understanding what goes into being able to analyze your financial position. And so we will be looking at these concepts very briefly. Of course, you know that accounting is quite an in-depth subject, but the objective today is to get a brief understanding of the accounting processes that will enable you to understand which accounting tools to look out for and use in your respective organization, which we will cover in the second PowerPoint presentation, which will then lead us to the third PowerPoint presentation, where we will be selecting one of these accounting software tools and we'll navigate through some of the most important and core features so that you get an understanding of where to begin when it comes to firstly identifying useful accounting tools out there and secondly implementing those tools in your organization. So accounting, why? Many of you are in the business of non-profit activity, and I'm guessing that the numbers game is not really your thing. So one of the reasons you ask, or one of the reasons you went into the field that you're in is maybe to avoid the numbers to some extent. But as you know, the numbers form the lifeblood of all organizations, whether you are in it for profit or whether you are in it for um, other purposes. And so, from an NPO perspective, there are a number of key reasons why good accounting practice is actually really important for your organization and for the continuity of your organization. And it really comes down to the users of your accounting information. So, we need good, accurate accounting information to enable sound financial management and good financial management decisions. The uses of financial statements vary, and as an NPO, of course, you are required to prepare financial statements on an annual basis. And the users then work through this information, and that information enables them to make certain decisions within the organization or towards the organization. And so, for starters, we look at NPO staff and donors. So your most important users of financial statements are arguably your donors. They donate or contribute large sums of money for you to achieve a particular purpose, usually a social purpose, whether it be within the lines of poverty alleviation, promoting equality, stimulating entrepreneurship, whatever it may be. And those donors expect to see where that money goes and how you spend that money as an organization. And so to accurately record those figures and provide feedback to your donors is then very, very important in order to secure funding moving forward and to secure repeat funding from these organizations. Of course, your staff form a very, very important part of your organization as well, and having good, sound financial management and accounting records enables them to understand whether their activities are going as planned or whether they need to make some really important pivots within the organization to change the direction that they're going into. The beneficiaries of your NPO is also interested in the way in which you spend money which is directed for their benefit. It enables them to understand whether you as an NPO is spending the money in an accurate way, in a way that meets their most pressing needs. And that becomes an important tool for building credibility with your beneficiaries. Of course, your regulators, whether it be from a CIPC perspective or from a SaaS perspective, also wants to see where and how you're spending your money within your NPO. So as you are probably aware from your governance sections that were covered, in order to be registered as an NPO and for tax purposes as a public benefit organization, there are very strict rules and conditions which you need to adhere by. And the financial information and your spending habits and your spending decisions influences the way in which you qualify for certain classifications. And of course, your directors also need to make strategic decisions as far as spending is concerned. And of course, the financial information plays a very, very important role in making them aware of where they're spending money and whether, from a strategic perspective, they need to make certain modifications to their decision making. And so you can see that even though you are an NPO and your motive is not profit orientated, the need for sound financial information and accurate record keeping is actually quite important. And so, having built the case for good accounting practice, we can look at the heart of all accounting practice, which you've probably seen at some stage in your life, which is the accounting equation. Now, the reason why we'll be going through this very brief exercise is that before you can understand and identify which accounting software or which accounting tools are useful for you, you need to understand how financial information flows throughout your organization so that you can select basic accounting software tools, intermediate accounting software tools, or sometimes very advanced accounting software tools. But if you don't have a very basic, or at least a basic understanding of how financial information flows through your organization, it becomes very difficult to make a good decision as far as selecting your accounting software is concerned. And so as a preface to looking at the various accounting tools out there, their features, their advantages, disadvantages, and eventually how to select your own accounting software tool, it's necessary to go through this exercise, which I hope will also alleviate some of your fears towards accounting. So let's look at what we call the accounting equation. Now, the accounting equation, like I said, is really the heart of accounting. And what you need to understand about the accounting equation is that the accounting equation effectively represents a system of balance. As you know, in any equation, an equation needs to balance. So what is on the left-hand side needs to equal to what is on the right-hand side. Now, within the context of accounting, this is exactly the same. And so when we talk about balance, everything that happens within an organization or business needs to balance from an accounting perspective. So there are resources coming in the business, there are resources leaving the business, and those inputs and outputs need to be in a constant state of balance. Okay, so when we talk about the accounting equation, we go deep into some of the terms that we use when arriving at this system of balance. All right, so in an organization, we typically have two categories of items: the things we own and the things we owe. So according to the accounting equation, everything we own is owed to someone. All right. From an accounting perspective, the fancy word that we use for the things that we own are called assets. All right. And assets, for instance, could be things like land, could be motor vehicles that we own, equipment that we own, inventory that we own, and cash that we own. These things that we own are owed to someone. And those someones could be either third parties, so people outside the organization, which we refer to as liabilities, or it could be owed to people within the organization, which we refer to as equity. So everything we own is either owed to people outside the organization or people inside the organization. Your liabilities, for instance, could be things like bank loans or creditors, whilst your equity typically relates to the owner or shareholders, or in the case of non-profit organizations, we simply refer to those things as your net assets, which will eventually be passed down to your beneficiaries. So to recap, everything we own must equal to everything we owe. And everything we owe could either be owed to people outside the organization or to people inside the organization. So let's take a look at some examples. So in your new NPC, you typically start off with cash, and you start off the organization and you then contribute cash. And this contribution usually comes from you as the founder, which then gives rise to a transaction. How do we record that transaction? So that 1,000 Rand contributed to the business, or in your case to the NPO, that results in an increase in your cash balance of 1,000 Rand. So now what the company or the NPO owns is cash to the value of 1,000 Rand. Do they owe this 1,000 Rand to anybody outside the organization? No. They owe it to someone within the organization, meaning you, the owner, which then relates to 1,000 Rand of equity that is owed back to the owner. Right? 1,000 Rand is what we own, and what we owe is 1,000 Rand. So the equation is in balance. Let's say we then took some of that money and we bought ingredients. So let's assume that our NPC is in the business of providing meals, and they bought ingredients. So we bought ingredients to the value of 500 Rand. Our cash then decreases by 500 Rand because we spent it. But in its place, we now have inventory for 500 Rand. Nothing changes in relation to owing, either outside the organization or inside the organization. So the only changes that took place was a reallocation of our assets. So our assets in the form of cash went down by 500 Rand because that's what we spent. But in its place, we now obtained inventory to the value of 500 Rand. So that minus 500 and that 500 equals 0. This is 0. And that transaction is then again in balance. Let's look at a third example. So we borrowed 5,000 Rand from the bank. So our cash balance goes up by 5,000 Rand because we now have an additional 5,000 Rand in our bank. But we then owe an additional 5,000 Rand to the bank, not to ourselves as equity holders. So our bank balance goes up by 5,000 Rand, but our liability balance goes up by 5,000 Rand as well. So in summary, the financial position of the business is then represented as follows. We have total cash of 5,500 Rand, which was the initial 1,000 Rand that we contributed, less the 500 Rand that we spent, plus an additional 5,000 Rand, which we borrowed. So we have 5,500 Rand in our bank account. We also have 500 Rand worth of inventory. So all of our assets in the business equals to 6,000 Rand. That 6,000 Rand is then owed to someone. Of that 6,000 Rand, 5,000 is owed to the bank, and the remaining 1,000 is owed to the equity holder, meaning us, who we contribute, meaning the contributors. So our total assets equals 6,000 Rand, and our total liabilities equals 6,000 Rand, and hence we've achieved balance. So this system of balance is what we refer to as the accounting equation. And from here, we then prepare what we call the balance sheet, which is effectively a statement which shows our financial position. All of our assets, all of our liabilities, and all of the equity within the organization. Now, what is important from this exercise is to understand that when it comes to accounting and financial management, accounting transactions give rise to recording events. So every time there's a transaction, we need to record that transaction. The accounting rules tell us how to record those transactions. And the outcome of all of those recorded transactions are then what we call your financial statements, which then gives us insights into the business, which enables us to make certain decisions. Not only us, but our other stakeholders as well. For instance, our donors, SARS, the bank, our employees, etc. And so when recording these transactions, we then look to tools that can assist us in recording these transactions in an efficient way, in a fast way, in an effective way, with minimal mistakes, and can give us useful information to enable us to make good financial decisions. And so that leads us to our quest to find the right accounting tool by exploring what is out there. And so when looking for the right accounting tool, the reason why we look for these tools is so that they enable us to record our transactions more accurately. Okay, if we are making less mistakes, we have more accurate financial information, and if we have more accurate financial information, we can make better financial decisions. It also assists us in spending less time on accounting work. Less time means less costs. And so we need to pay accountants less, and we need to pay our staff less because they're spending less time on accounting work. And saving costs, of course, is always a good thing. When generating reports, the accounting software enables us to generate the types of reports that enables us to make quicker and easier analysis of what's happening within the business from a financial perspective. From a practical perspective, it also enables us to create backups and allows for easier accessibility, as most of these accounting software tools are currently sitting in the cloud. Historical analysis then becomes much easier because we have information in a consistent format, which is then prepared year on year, and then enables us to understand how we've either grown or declined or moved within a certain direction in the business by preparing these reports that enable historical analysis to be much easier. And so in our next voiceover PowerPoint presentation, we'll be looking at some of the accounting tools that will help us achieve these objectives. We'll also be analyzing the advantages and disadvantages of some of those accounting tools, and will also give us some context within which we can make our decision in selecting the accounting tool that is best suited for our purposes, whether it is at a basic, intermediate, or advanced level. So with that introduction, I'd like to say thank you, and I will catch you on the next set of slides. Thank you very much.